All right, welcome back, guys. This is our second kind of check-in. And what I wanted to do in today's meeting is just the agenda is, and I'll share that agenda. And it's to kind of look at kind of what have we learned since we last met. And that we'll check in with everybody. Then I want to kind of revisit what our plan is. And then I'm going to give you a very quick 50,000 foot level of a few strategies. And then we'll talk about kind of our accountability plan. Does that sound good?
Yep.
All right, yep. Everybody give me the thumbs up except Nancy, because she doesn't have a video, if that works for you. It's a way of checking in to see if you're actually paying attention and not, something else. So let's hear from you. What have you learned since we last met? And not just in general, but what have you learned about options trading, or what have you been doing, or have you, to the degree that you tackled anything on the development plan? Let's just hear from you one at a time. Who wants to go first?
I can start first.
Okay.
So far, my biggest things that I didn't know about options trading. Let me actually catch up. I think we had a lot of new people, but previously I've only day traded stocks using the Thinkorswim app, and I've kind of been very interested in the options, just so be able to grow not only my buying capacity of what I can buy or sell, but also just options in general. I didn't have much information on it, and every time I was trading them, I was making a lot of mistakes. So contacted Dale, and I've been starting to learn a lot about it. And a few things that I did not know before that I'm kind of picking up now are all the Greeks. And I never knew. I always saw that they were present there, but I never really had an idea of what they were doing. So in this last week or so, that's what I've been watching a lot of videos, especially the Tasty Trade videos about like Delta, Theta, and what are the benefits of being a seller versus a buyer. So that's pretty much what I've learned so far, and I'm trying to kind of master that aspect of it on how how Theta works, how Delta works, what are the pros and cons of it, and pretty much everything on that.
And Jamal, did you read the document about kind of the Tasty Trade document? I think was the first one I sent you.
Yeah, this one, the secret trade.
Yeah. The secret side of trade. Yeah.
I sure have. What was your question? I'm sorry.
And was that helpful?
Yes, very helpful. Yeah, definitely very helpful, and learned a whole new aspect of it. And I'm very interested in seeing how much further I can take this part of my trading career.
Nice. Well, I guess my first objective is to convert most of you into realizing that being an option seller has its advantages over being a buyer. They've said that 90% of all option traders lose 90% of their account value in the first 90 days. And I think what it is they approach it like a gambler. And so the benefit of being and I see Quan laughing because he's like, I resemble that remark.
I resemble that as well.
Yeah. Quan, do you mind sharing with the class how you learned to play poker?
No, I'll let you do it.
Is that all right? Can I share it with them?
Yeah, sure.
Okay. Quan said he learned how to play poker by playing limit poker online, and he didn't know anything about the game. And I believe he invested $11,000 in his learning.
Yeah, playing 2-4 limit.
Playing 2-4 limit, he invested $11,000 in his education. So I asked Quan at one time ago, how much do you think you would invested if you'd had a little coaching up front? He tended to think, well, I learned by doing. And so hopefully you can balance that a little bit. So maybe you could, take your fat fingered mistakes from 11,000 to maybe at least cut that in half or even better. So, all right, welcome Jamal. And I'm excited. I know you guys have not met Greg yet. So I also want him to kind of introduce himself, but, and so who wants to go next? What have you learned since we last met? What have you, if anything, and what on the development plan have you focused on?
I can go next.
Okay, Nancy.
So I learned about Theta and Delta, which I know, you taught me a lot on that.
Okay.
Like what to see every day, whether it's negative and positive. And then you have helped me a lot on the SPX trade. So I learned a lot on that, how to do the spread larger so we can get a credit as long as we have buying power and
Right.
stuff like that.
So Nancy's learned about kind of how spreads will affect the amount of buying power that it uses. So, okay, good. And every day I think Nancy's probably getting sick of it because I'm asking her what her beta weighted deltas are and what her theta is, because to me, it's kind of like flying it. That tells me my altitude. You know, I want to know kind of how I'm doing on theta. And that gives me a big picture on whether or not I want to have less theta, whether or not I want to have less delta or more delta, because I tend to trade more neutrally. That way I don't have to worry about direction.
I saw some videos on that as well, but not as clear on how the weighted average works. So I'm gonna try to find some more content on to learn about it. Just not as clear to me as yet.
The weighted, do you mean
the beta weighted average?
Beta weighted deltas.
Yeah, beta weighted delta. Sorry.
Essentially, what that does is it you know, you have maybe 20 underlyings. And here's the analogy. You know, if I owned a coaster and a glass of water and an iPhone, you know, they all kind of have different values. So how could I compare them to each other? So what beta weighted deltas does is it enables you to kind of add those all up so that you're comparing them the same thing. And it shows you if you were 100% invested in SPY, SPY, what would that number be? So one of the things I like to do is to take my net liquidation value and divide it by SPY. And that kind of gives me a number that if I was 100% invested in SPY, everything I had in that account, what would the number be? So if that number is 100 and I have a beta weighted delta of 50, kind of tells me that I'm taking half of the market risk. If I'm negative 50, for every $1 SPY goes up, I'll lose $50. For every $1 it goes down, I make $50, and kind of vice versa. So in a nutshell, it gives you a measure of your market risk. If I was to put it in a few words, it helps you to measure the degree to which you're exposed to market risk.
Dale, you said for each dollar down in the SPY, you'd lose, was it 50 cents?
It depends upon if your beta weighted deltas was 100.
Yeah.
For every $1, a positive 100, for every $1 SPY goes up, you'd make $100.
Okay.
For every $1 SPY goes down, you'd lose $100.
Yeah, that helps.
And if it's negative, it's the reverse. If it's negative 100, for every $1 SPY goes down, you'd make $100. So if you're bullish on the market, you'd want SPY to be positive. If you're bearish on the market, you'd want your beta weighted deltas to be positive. If you're bearish, you'd want them to be negative. If you're neutral, you kind of want it closer to zero. And for me, it depends on your size of your account, but you know, from positive, for me, an account value of $50,000, I'd kind of like it to fluctuate somewhere between plus 200 and minus 200, depending upon if the market's hitting all-time highs or if it's hitting all-time lows. So that's it. All right, who would like to go next? And if you haven't done much since we last met, there's no need to bluff.
Well, I still learning a little bit at the time, so not much, but a little bit at the time. I didn't have much time lately.
All right.
But I'm working on it. I'll catch up with you guys.
Okay. Greg?
Yeah, I could give a quick intro. Dale got me started, and I immediately, it was the weekend we were launching a new concept at our restaurant. And the stress of that threw my heart out of rhythm. And almost I was within one tick of getting a shock, where it goes zaps you and they take you to the hospital. I'm like, oh my God. So that I just found out today. So life's been a little bit crazy in the last few days, but should settle down fine because he changed the medication and all that garbage. So I should be getting into it. Dale's kind of set me on motion. I've got the plan. I'm starting to dive in. Areas of highest interest for me are spreads. I would love to do iron condors on the SPX. I want to test that immediately. I'm using the 0 DTEs. I love that idea. I'm a super, I guess, focused on protection. I guess I'm afraid because of that. So I want to have a lot of protection that I don't get into any undue risk. For example, I just dive in and I'm like just into the options, getting back into them and kind of re-educating myself on them. And then I see the Tesla example from just a few weeks ago, and it was psychotic. I mean, that to me is insane. Yeah. And so if you have that kind of insanity, for me, I'm not a guy that wants to risk my account on that. And so that leaves me like, I can't stand that risk. And so that's why I zero right in on 0 DTE, because I don't want to take the overnight of a Trump tweet or a China war or whatever. I cannot do that. And so for me, it really comes down to, I was totally enthralled with the Tammy Dale 0 DTE program and figured I got to do what Mitchell and everybody else says, is run 100 trades through it and tell me how it performs. And if I'm above water, I'm all in. I'm going to go full drive in that. And so that's my focus. And I just got into trade diff. I just got signed up and signed in and kind of doing that. I just got Dallas Traders and Tasty Nation up and just got it all kind of set. And now, I have some dumb questions, but I'll ask them anyways. Like in trade diff, if I trade in my TOS sim account, will trade diff track those trades, I assume? Or do I have to trade in trade diff to see it track?
Yeah, well, let me answer that. The trade diff simulation is independent from your real account, and it's independent from the paper trader on Thinkorswim. If you have a real account and you've connected your real account, you can see and track your performance on your real account. You can put things in categories, see how a specific category is performed. But you think of the TOS paper trader and trade diff as independent. So the only thing you can't do in trade diff currently that you could do in TOS is put on stop losses, or you can trade SPX.
So no stop loss, no SPX.
Yep. So if you trade SPX, I'd suggest in the paper trader, you could trade SPY.
What about my live account, which is now linked to trade diff? Could I use the on-demand feature and run that, and would trade diff track that trade?
It will not track anything from the paper trader.
Okay.
Okay. It only tracks things from your real account. You can do that.
And my real account can run on demand, correct? In TOS.
Yes.
And would it be able to track that trade?
It will not track any trades that are from the paper trader.
Okay.
And on demand is a paper trader.
All right, got it. Okay.
Yeah. So Mike has joined us. So welcome, Mike. And we're just now kind of going through kind of what have you done or what have you learned since we last met. And let's see, is there any, Mike, have you met Greg yet?
Don't think so. I'll be in and out. I got some conflicting things going on, so don't mind me if I pop in and out. But
but do you have time to go ahead and introduce yourself, Mike, and kind of tell them your role on trade diff?
Dale's probably.
Hi, Mike.
How's it going? I've been working with Dale for a little while on this project, and we're trying to make it into something that's pretty much an educational platform for everybody. So we're trying to figure out the best ways to do that. And we're hoping you guys can help us figure out like what's the best way we can bring you guys value and learning how to trade options and make something different out of it that's available right now. Right now, there's a lot of, typical newsletter stuff out there. We're trying to make this different. We're trying to make it unique, innovative, by using Dale's, type of, kind of technique in teaching with combined with the platform and, use the platform to get people involved, and kind of more hands-on approach. So we're trying to figure out the best way to combine everything together into something that's actually pretty unique. And Dale and I have been using the platform to learn from each other actually for the last couple of years. So it's working pretty well for us so far. So we're hoping that we can figure something out for you guys.
Quite a piece of work. It's awesome.
Thank you. Thanks a lot. Appreciate it.
Mike and I worked together on building it for 2 years before we actually ever met. And I was down in San Francisco. We got to meet for the first time. And so it's been a journey. And we figured the worst thing that could happen is we're both build a toy that we're going to be using till we croak, because we plan on being option traders from now further till I croak. And I think Mike is kind of the same way. I met Mike by watching a YouTube video that he did actually on strangles, and I searched him out online and kind of liked the way he thought and the way he trades. So we've been collaborating ever since. So let me go ahead, and I think that's everybody. Is there anything else, anybody else that wanted to add or kind of questions that you have? Mike, I was just answering. Greg had some questions about, and I was telling him that we cannot link to any paper trading account. It's only to real accounts, and that the simulation trades that he makes on TradeDiff are independent from any simulation trades that he'd make on Thinkorswim.
Yeah, we don't connect to the paper trader on Thinkorswim. We actually, we're building the platform so you can actually paper trade on TradeDiff. And then once you start paper trading on TradeDiff, Dale's probably explained this to you, but you'll get the whole collaboration platform and the tracking and the history and all that stuff involved along with it. So you can track your performance in ways that you wouldn't be able to do on TOS.
And some of you, I don't know, Jamal, have you made a trade yet on your simulation account or not?
No.
Okay.
I've been trying to move over from the TOS platform to this TradeDiff.
Got you. And I know Quan has, because he was in our last contest. OJ has, because he was in our last contest. But for this contest, I'd ask everybody, and I'm going to propose that we start off with a paper trading account of 200,000. And the reason being is we're going to teach a lot. I'm going to teach you about 5 or 6 or 7 different strategies. And I'd like you to have plenty of capital in order to do all of those strategies. So Tasty Trade would probably propose that for risk management purposes, you might only trade 50% of your account value. So, and the reason it is, if you experience a 2008 type correction, you need to be able to recover from that. And if you're trading a lot of naked strategies and you experience a big drawdown like 2008, you may never be able to fully recover from it because of that kind of leverage. So all I'm going to, and that's kind of my argument for starting off with a bigger amount of capital. Now, some of you may not trade that size of an account for real, but I think it's going to be pretty easy for you to kind of take certain strategies and scale down for it. So you'll develop kind of your own, here's my poker analogy, is you'll develop your own playing style and your own comfort level with certain kinds of strategies. And then you'll decide how many of those could fit given the size of account that I'm trading. So let me kind of go through some types of trades now. And I think this might be, I think sometimes the best way to learn how to swim is just to jump in. Now, don't jump in the real deep end like Quan did when he learned how to play poker, but kind of jump in the kiddie side and splash around a little bit. And so what I'm going to do is walk you through a few strategies now of what my favorite types of trades are. And I may go through them relatively quickly. I know Greg might need to leave us maybe about 5:15. Is that like in about 20 minutes? Is that right, Greg?
Yes, sir.
So I'll kind of try to go through these kind of quickly. And then if he needs to leave, I'll stay and answer questions from the rest of you. Sound good? Give me the thumbs up. Just
Yeah.
seeing if Quan's listening. All right, good. All right. So I'm going to go back to the screen now and share a few trades. And I think this is probably the easiest one to do, is to sell naked puts. And if I can bring over trade diff now, I'll demonstrate it. So I've created a simulation portfolio here. And let's see, let me go. That's the wrong name for my simulation portfolio. I believe, Mike, do you remember what we called it? It was the coaching portfolio here. And what can happen is I want everybody to go in here into settings once you create it. And the way you create it, those who haven't created it before, is you can just click on this create simulation. Generically, it will name it something here. It'll just name your name, and then it'll say, like mine says, Dale simulation portfolio. That'll be your generic name for it. But once you find the one that you want to use, you can go into settings. You can change the amount here to 200,000. You could name it something creative. When you name it, you'll always need to click update. You could describe your portfolio here in a description. You then can create certain groups down here at the bottom, new groups. And the things I'm going to teach you is I'm going to teach you how to sell naked puts. And, you know, I may teach, the group already exists. So naked calls, naked puts, strangles. Then I'll also teach you poor man's covered calls. And always click on create new group. And I'll also teach you poor man's covered puts and create groups. So once you're finished with that, you can go into your actual portfolio and you click up here on trade. And Mike has enabled mine for after hours trading just so I could demonstrate it for you, but you can click on trade here. Now, the first thing I want to teach you is how to sell naked puts. And selling a naked put is a bullish strategy where you can collect premium every month you sell a naked put until it goes down, at which point you'll have a chance to either close it or to own the stock. So I'm going to do Apple here. And if I click on Get Chain, and then I go into the November underlying. My favorite length is at 45 days. And over here on Delta, basically that's the probability that it's going to hit that strike price. So roughly there's a 26% chance that it would go down to 103.75 and hit my strike price in Apple. So I'm going to sell a 20 Delta, and in trade diff, it's in percentages. So I'm just going to go ahead here and click on sell here, selling the 100 put in Apple 45 days from now. And I'll just do one contract just to demonstrate it to you guys. And then I'll click submit. Then what I can do is I can go in here to Apple. I click on these three dots here, and I'm going to put that in a category called naked puts. So it's now in the category of naked puts. Anytime I want to update it in real time when the market's open, you just click here on refresh or reload. And I suggest that everybody use the browser of it's the what's the Google Chrome, yeah, and you can reload it there. So that is in essence selling naked puts, and it's a bullish strategy. So what I would suggest is that your first assignment is to go out and sell 2 to 3 naked puts. If you want, just do one contract on some underlying that you're bullish on. I prefer, if you haven't studied yet about liquidity, it's best to trade the most liquid products. And the reason being is if you don't trade liquid products, it's going to be like going to a bad money changer at the airport in Mexico where they see you coming. And there's a big difference between the bid and the ask. And every time you trade, you're going to leave money on the table because they saw you coming, you know, and you're not from around there. They can hear from your accent that you're a sucker, right? So the price just went up at your money changer. Well, that's kind of like what it is when you're trading an illiquid product. So for that reason, if you don't know what a liquid product is, take a look at I've uploaded the documents of the most liquid underlyings and the most liquid ETFs. And I would say 90% of all my trades are from those lists. I sent you, it's called Sosnoff Setup, and it's a CSV file, and there's most liquid ETFs. Now, you don't have to do that, but I would suggest that you trade things from that list that you're bullish or bearish on because they are the most liquid products. And that's the first thing, is selling a naked put. So that's kind of the first strategy. Now, if you want to brush up on what that is, then you go to the development plan and you watch those videos on selling naked puts. If you prefer just to jump in there like Quan did, you know, playing poker, then, you know, just jump in and start doing it. But if you need any guidance, for me, selling a 20, you can't go wrong with just selling a 20 delta put. The closer you get, the higher the delta, the higher the probability that it's going to go down and hits that strike price. You know, I've produced some videos. One I did with Masu, telling him how to get Boeing at a discount. And you could watch that video on YouTube of selling naked puts on Boeing. So the second thing I want to kind of teach you is just selling naked calls. And Mike loves to do this on things that he's bearish on, and so do I. So let me kind of bring that over. And selling a naked call is something that you are bearish on. And the reason being is you're selling a naked call until it goes up, and then you either have to close the trade or you're going to have a short position on that. So I tend to be bearish on Royal Caribbean. I don't know, it's a petri dish of COVID-19. So, you know, I can't imagine a bunch of elderly people wanting to herd up and take a big cruise at this moment. I mean, there are people who do it, but personally, I wouldn't want to be one of them. So I tend to think, okay, I'm bearish on Royal Caribbean. So if I, let me go back into my account here and
Order
simulation, coaching. All right, so let's go into Royal Caribbean. And I'm going to click on trade here. And Royal Caribbean is RCL. And RCL is currently trading at $69.29. So if I go into the November monthlies, I prefer to trade monthlies over weeklies because there's more liquidity. So if I go in here to, let's see, it's trading at $69.29. So if I sell a 20 delta call, you see there's not, the liquidity is not great. And this may be partially because it's after hours, but $1.77 and 215, that's almost 30 or 40 cents difference. So, you know, so don't just, let me see if I can think of one that's, you know, Tesla I tend to be bearish on, but you know, I really had some scar tissue on my rear end from where, you know, Tesla went to the moon. So, you know, I tend not to be a superstitious guy, but if I was superstitious, I wouldn't touch that one again. But let's see, theta numbers, 20 delta. This is okay. let me go down to say a 20 delta, and I'm going to sell a 10 delta because this stock scares me. So if I go to 10 delta here, what is that? I'm still get chain. Just looking at something wrong there. Okay, 10 delta. I think I was looking at theta. Okay, 10 delta here
So
is
10% chance it could go down to the 640 strike is what you're saying.
Yeah, so basically it gives me
By
a
expiration.
90% chance that this is going to expire worthless, and I just keep the premium.
And a question for you,
Okay.
Dale, on theory, what's that formula called? The Bajor, whatever it is, the German.
Black Scholes.
Thank you. That one. Is that thing BS or is it real? I mean, have you, with your experience, have you experienced that? Well, gosh, I did a 90, 10 and it still hit me, or you did a 95 and it's like, you'd expect that you wouldn't get hit too often. And
it's the best we've got, and it's really driven by market pricing on these probabilities. So there's nobody out there, no guru that's determining it. It's really based upon kind of a normal distribution curve. And if you remember that from statistics, you know, that 10% is on the wings. It's out here, 10% to the upside, 10% to the overside. So 80% is kind of in that middle. And outlier events do occur. Black swan events do occur. The fact that it's called a black swan is nobody saw it coming. So if you see it coming, it's probably not a black swan. But COVID was a black swan event for this year. So let me just demonstrate here. If I sell a naked call in Tesla, but really good question, I'm going to go ahead and sell this. I think that there'd be more liquidity right now if the market was open. So you would see Tesla tighter than this. But if I go in and I decide, okay, well, let's look at the weeklies. Let's go to the 20 delta weekly or 10 delta weekly. Here's 12%. That's a lot tighter. So I'm just going to go ahead and sell this guy. So I'm selling a bearish call option at a strike of 520. So what that means is if Tesla goes up and hits 520 by this expiration date of October 23rd, my choices would be to either close this trade or to accept a short position in Tesla. What a short position is like is if I borrow Jamal's wheelbarrow and then I sell it to Quan immediately. And I'm hoping that Home Depot puts them on sale a couple weeks from now. I'll go buy that same wheelbarrow. And Jamal won't know the difference because it's the same identical wheelbarrow. And I go, Jamal, thanks for the wheelbarrow. Here's your wheelbarrow back. And if I bought it for less than I sold it for, I made money. So shorting a stock, you make money if it goes down. And so since I'm bearish on this, I'm going to submit that. And then I'll go back into my account and it shows up into new trades. And then I'm going to put this trade into naked calls. And so your assignment, should you choose to accept it, is to then sell 2 to 3 naked calls on some underlying that you're bearish on.
Dale, how would you decide what how many weeks out? I mean, what goes into the decision process? Is it how much credit you can get, or is it?
I prefer to put on a trade that's 30 to 45 days out, with the one exception is being Tesla, because it has had so much volatility. And as I just showed you, the monthlies don't seem to have that much liquidity, but the weeklies tend to do it. So it seems like there's so many short-term traders in Tesla.
So Tasty Trade has done a lot of research on this, and they say the optimal time is 45 days. They say that takes advantage of the most most amount of decay. Whereas if you go further than that, then you don't get your best bang for your buck. That's the research, and makes sense to me.
And it also gives you some time to adjust it if some things go against you. And that's especially useful for strangles. They also advocate taking positions off at 50% of your max win. And the primary reason for that is it helps affect drawdowns.
Part of the great thing about paper trading is that if you were to trade strangles at 30 days out, 10 days out, 60 days, 7 days out, and you would see the behavior of how these options change based on the underlying movement, you would really see the difference. And it's hard to understand without just doing it, without seeing it.
Yeah.
And
Yeah.
seeing it actually in action.
I have 2 questions.
Okay.
Number one, if we're selling puts, do we have to own, like if we sell one contract, do we have to own 100 shares for that stock to be able to sell it?
No, but you do have to have approval to trade naked options in your account. And what happens is your broker holds in escrow an amount of money to protect them from that risk. And I believe it's about 20% of if you actually own the underlying. Is that about right, Mike?
I think so. Depends on the account you have, but
Yeah.
I want to comment on that because I think that's a great question. And here's another big value add that when you paper trade and you paper trade like $100,000, $2,000 account, that the benefit of that is you'll be able to sell puts and be able to trade them and learn about them and learn the mechanics. Whereas if you had like a $10,000, $20,000 real account, you may not be allowed to sell a put unless you have it secured by your cash. And you may not, and then you won't learn anything because you can't do anything with it because you won't have the capital. So that's going back to what Dale is saying, is why we want to give you enough capital in paper trading, because we want you to understand how things behave and not have limitations like my account doesn't let me sell naked calls or naked puts. We want you to learn that stuff now and not have to deal with that.
And I'm optimistic that you may be starting off at it with a $10,000 or $25,000 account, but at some point, I think you'll be successful. At some point, you will have a higher $100,000 to $200,000.
Yeah, learn the stuff now for later when you have a little more capital to work with. That's kind of the advice we're trying to give to people who are just starting out with small accounts.
And I'm also watching the clock because I know Greg needs to get out of here at about 5:15 or so. So, our choice at this point is I could teach you another strategy, but if Greg needs to go, I might just call an audible and say, hey, we've gone far enough with just those 2 strategies. And then everybody can kind of start your account, start trading. Let me know the name of your account on Slack.
Hey, Dale.
Yeah.
Did you talk about the contest?
Yeah, a little bit. We're going to, once you all give me the name of your account and you establish your account and you make your first trade, let me know. And Mike will set us up a leaderboard. And I think everybody has already agreed. I don't know if Nancy, if I didn't hear from you in Slack, but what we would do is buy into the contest for $20.
Sure.
And what Mike and I are going to do is we're going to match the prize pool. And I think it's a small enough group that it's kind of winner can take all. Because I don't feel any need with this small group to pay a second place. But our primary objective here is learning. And we don't want to make the buy-in so big that it's all about winning. We don't want to deviate from that. But at the same time, we want to make it interesting and give some skin in the game. So
Love it.
Mike,
What's the duration of the contest will be?
I envision 60 days, which will give you enough time to slowly kind of put on trades, learn about other trades. I would propose kind of that we do some type of a normal standing meeting like this and keep it short enough so it's not too burdensome on your time. And in the interim, we can talk on Slack.
Real quick, I gotta jump off here. I gotta go. But what I want to say before I leave is what we want to try is we want to have multiple contests. We can do one every 2 months if it works out well. We always want to add some kind of incentive. Anything, $100 Amazon card, anything that just kind of adds a little bit of incentive. Just not too much, obviously. But the goal is every week, Dale and I want to kind of cover a strategy, and we're going to require that you actually try to trade those strategies in the contest. And then every week we're going to move on to a new strategy, and we're going to see how well you can learn the strategies and actually execute them within the contest. And then we'll all be able to compare each other's portfolios and talk about who's doing well and who's doing bad and why we're doing well, why we're doing bad. I think it'll be a really good, and Dale and I are also going to compete too. So we're going to have a little fun with it too. So looking forward to it.
We'll compete,
Absolutely,
but not we'll compete, but not be eligible to win.
Dale can't win my money. No, that's not gonna happen.
Yeah, I can't win in contests anyway. You guys know that. But the other thing is, let's see, what else was I going to say? Any questions so far? Well, I think
One question I had was on the trading, your comments on having implied volatility and volume and how you would use those two in your decision.
Yeah. Volatility is most applicable, especially applicable when it comes time to sell strangles. What I do in my $1 million paper trading account that Mike and I are competing on, and we're kind of adding people into that group that are potential kind of portfolio managers that are more seasoned, that have done this for a while. And so on strangles, that's primarily where I'm looking a lot around volatility rank. And what I've done is on toss is I set up a volatility rank that I can, and I've put all of those most liquid underlyings into that. So I can every day see what's ranked higher in volatility. And so when I'm looking for a strangle to sell, I go back to that list and I say, what's some high volatility underlying that I want to sell a strangle on?
And how would the implied volatility compare to the VIX?
Yeah.
I'm trying to understand.
VIX is kind of looking at the big picture. It's also been called the fear index of the entire market.
Yes.
Then each underlying has kind of its own fear index based upon the volatility. Now,
and
here's
each strike too, right? And each option.
And if you really want to get microscopic, I don't tend to look at the individual strikes as much as I look at the overall.
Okay.
And the way it is it's volatility. The perception of volatility is the perception of fear. So if you are on the coast of Florida and the survey says that there's a hurricane coming, what do you think the price of hurricane insurance is going to be?
Yeah.
It's going to be real high because people are scared to death. So as an insurance salesman, Warren Buffett has all that priced in. Geico, he's got good actuaries. He's still going to make a profit, but he's going to sell you that insurance. So when fear is high, I'm selling on fear. When other people are scared, option prices are elevated. It can be a scary time though, because those waves are coming and they're hitting your shit. But at the same time, you're getting paid. It's an opportunity. And there's a Chinese word or a Chinese symbol that one part of the symbol is danger and the other part of the symbol is opportunity. And both of those are going on at the same time.
Mm-hmm. How about open interest and volume, Dale? Any thoughts there?
When normal volume is high in an underlying, usually the spreads between the bid and the asks are going to be better. And that's the definition of liquidity, the most liquid underlying. Now, your second part of your question was what, Greg?
Open interest.
Open interest. I don't really look at that.
Okay. What is that? What does it mean? Is it just
kind of how many people there are out there that want to either buy or sell?
Orders that haven't filled.
Orders that haven't filled, but somebody's put something in and they're interested in either buying it or selling it.
Basically, I think what Tasty Traders in their video, they were talking that if there's 50 buyers and 50 sellers, then the open interest will be higher than if there's no if there's more buyers and less sellers, if it's skewing to one direction, basically.
There's something
Nice.
called skew. And sometimes if you look at the same at the money, if puts are more expensive than calls, there's more fear to the downside.
Okay.
And sometimes that's called kind of skew.
Mm-hmm.
But truthfully, I don't concern myself with open interest. I mean, if you watch CNBC, occasionally the Nigerian brothers will talk about kind of weird option trades or something like that. Or if you go into Twitter, you got this dark pool lady that claims to have some algorithm to tell what's going on in the dark pools. And some people adhere to that. I am skeptical. I'm sorry, dark pool lady, if you're out there and if you're listening to this on YouTube, but I got my buddy of mine that swears by it. And so, okay. I mean, but some of it is, I'm teaching you guys based upon kind of what I've found over is my playing style. Now there's other people that are winning players that have other playing styles. So don't feel like you just have to follow kind of necessarily what I'm telling you, but it's just kind of what I believe gives you a higher probability of being a winning player. So if I'm teaching you poker, I'm going to kind of teach you kind of the basics and kind of what I think works for me, but gamble it up or do whatever. If you want to do it, or if you want to take some shots, if you've got the capital to do it, more power to you. But what I want to teach you is what are kind of high probability trades. And I'd rather trade more like the casino than the person playing the roulette player.
I had one question that was related to so when you were selling the naked puts, you said that you would prefer 20 delta or below. When in reverse, when you're selling naked calls, are you looking for 80% delta?
No, I'm also looking for 20% delta there too. So that's basically the probability that it will hit my strike.
Okay.
Okay. I don't necessarily want it to hit my strike, but I'm willing to because I'm bullish on these and I'm bearish on these. If I got a big enough account, I'm not that worried about being long some stock or being short some stock. So if there's a 20% chance I'm making money, all of a sudden something weird happens, boom, it shoots up to the sky and now I'm short Tesla. Well, okay, I was making that bet, realizing that might happen, and now the day's happened. So now it's kind of like, it's called the wheel strategy. Now I'm going to describe the wheel strategy on selling puts. You sell a put, you sell a put, you sell a put, you sell a put. All of a sudden, maybe you've sold 6 months of puts and you've collected all that premium. So now it goes down and all of a sudden I own Apple because it's gone down that 20%. It's gone down. Now I own Apple. So now what I'm going to do is I'm going to turn around and I'm going to sell 20 delta calls against that stock that I own in Apple. Sell call, sell call, sell call, sell call, sell call. Boom. One day it goes up. It hits my call, pops me out. No longer do I own Apple. If I'm bullish on Apple, what do you think I'm going to do? I'm going to start selling puts, preferably on a down day.
What if you don't want to own it? Then you get rid of it before?
If you don't want to own it and it goes down and it hits your strike, I have a few options. One option, roll it out in time, which is kind of what we've been doing to SPX, Nancy. I know you know what that looks like. Roll it out in time. Second option, own the stock, take it. The third, close it, potentially for a loss. Those are your three options.
So when you roll an option, do you pay the loss that you've already accumulated?
Depends on the strike. Do you pay the loss that you've already accumulated? Essentially, no. You could roll it out, but it's equivalent to closing your existing trade and opening up a new one.
Okay. So
But
you're just not
in a way, you're kind of delaying and you're giving yourself time to be right.
I learned that the hard way because I was scared to I was scared to roll. I mean, I was scared to close.
Nancy was doing it with SPX. So as you can imagine, SPX is a very large underlying. And she kept doing the roll and she had realized, but wait, I don't want to lose. So I don't want to close it. And I was trying to explain to her, rolling is the same exact thing as closing this trade and opening another one.
And do you get the opportunity to roll it at the last date of your strike, or you can do it at any time?
98% of the time, you will never have something that exercises early. There's one exception when there's a dividend coming up and it's close enough to, it's in the money, but somebody decides that they want to exercise it a day or two early and get the dividend. If that happens, you are responsible for paying the dividend if you're short. Now, what's weird is once they exercise a dividend, let's say they pay $1, what you'll see is the price of the underlying goes down by about $1 once they pay $1 in dividend. So in a way, it's kind of a wash. It's kind of like, when there's a split, 2-for-1 split, well, the price of the underlying gets cut in half. So it's just a financial engineering. And by the way, that's why Warren Buffett never splits his stock. That's why Berkshire Hathaway is worth, I don't know what, $200,000, $100,000, $125,000 a share or something. I haven't checked it lately. Anybody know that? What Berkshire BRKB is trading at?
It was like 300, I think.
Is it? All right. BRKB. It doesn't even recognize it. I don't even think TOS is made for that many symbols.
323,000.
$323,000 a share.
Yeah. And B is $215.
Yeah. Greg, what's your time frame? Are you needing to get out of here?
Yeah, I'm going to drop off and then watch the remainder.
Well, I'll just go ahead, and I was going to teach you guys, but OJ's not with us and I don't know what happened to him, and Greg needs to leave. So I think that's enough strategies for you guys to work on between now. I don't know. Is 1 week, is that enough to kind of say between now and next week, maybe put on 1 or 2? Now, remember, you're selling and not buying. So sell 2 to 3 naked puts that you're on something you're bullish on. Sell 2 to 3 naked calls on something that you're bearish on. Put those into categories, and we'll check on Slack on an available day next week. And we'll turn in again and then learn a couple more strategies, and maybe 2 strategies a week. So it's kind of, here's the model: tell, show, let you try, kind of give you feedback along the way. So there's a 4-step kind of model for coaching you guys through this. So hopefully I've told you, you can watch the video. I'll put it out there. You can watch it again if you need to. You can watch some things on our development plan. Gives you kind of some more background information on these 2 strategies, selling naked puts. And then we'll see you on Slack.
I'm excited, guys. Thank you.
Yeah.
Thursdays work the best if we want to do the same time next Thursday.
Yeah.
That works for everybody.
All right. Does that work for everybody else?
Yes.
Absolutely. Yeah.
Kind of like, say, 4:30 time on Thursday is our standing meeting time.
Yeah, that works.
Does that work for you, Quan?
Yeah. I have one minute for Greg. I saw your question on the YouTube, Dale YouTube video about how to place an order with the stop order and target order. I get some comment there. I don't know if you read it yet, but yeah, I know you say you trade a future contract before, right? ES and CL.
Yes.
Just like future contract, when you place the order, when you place the sell to open order, you can play the stop order and the target taking, profit taking order at the same time. you know, when you enter the trade, you can take it just like future contract, but you use on the drop box, on the tops, on the drop box, look for the advanced order and use the first trigger OCO. That's and just play with it. You know, I do the same thing because I like to get in the trade before with knowing what I'm risking and what I'm going to get. So I placed the order just like that. I saw your question.
I watched Dale on how he did the stop, and so I've been doing the stops, but I haven't done the take profit. So that's an interesting twist for me to try too.
Maybe maybe next week, Quan, if you want, you could share your screen and kind of show us that if you want to.
Okay.
Not now, unless Greg. I think he needs to leave now. But maybe if we do that next week.
I would like it. Yeah, that'd be great.
Sound good?
All right, bye, guys.
All right, guys.
Bye.
Thanks, everyone. And we'll see you next week at 4:30. And I'll check in with OJ and see what happened to him.
Okay.
All right. Thank you so much, Dale. Appreciate it. Thank you, guys.
Thank you, guys.
Thank you, Jamal.
All
All right,
Appreciate it.